So if anyone sees this and says, oh, this is inefficient, it's very efficient, because on the daily chart, we've backpedaled on every candle to logical levels of rebalance up to a bearish order block. I don't know what the votes or decisions that they're going to do for Brexit over in the UK right now. I don't know what that's going to mean for cable. I don't know. I've been very open with you in regards to that. But from a technical standpoint, it looks as if this thing can really spread up into these equal highs. That's what I would expect, me personally. I don't know what it's going to do. Normally, I won't say those types of things. I'm very confident about, okay, I think it's going to do this, and I'll leave it with it. But here, I think and believe that it's going to go here. But I could be wrong, and I'm okay with being wrong in this instance because it's something I'm learning with you, real time. I don't know what the ramifications are going to be on certain decisions and votes. I watched a portion of the Parliament gathering today, and one of the speakers made a very good point. There's been just talk about the plans for Brexit to be what the people want. And then he brought up another one. He said, this is supposed to be the plan that the people want. And he said, look, both of them can't be what the people want. And then another gentleman gets up and says, well, that's the problem. Everyone wants something different, and we can't answer that. So it's very confusing for me too on the outside, and I don't know how it's going to get settled. I hope it does, but I just want it either you're stuck there or you're getting out, one or the other. But staying in this back and forth is just going to eventually create another problem for cable, and it'll just be an ugly market to trade again. If it can be resolved, or a promise of a specific deadline when it will be resolved, one way or the other, then it'll provide at least a condition so that way the market can be more free to move around. Because right now, central banks are loving this. They're loving it. And that's why you've seen an 800-point move in cable in a short period of time. So let's go down into a lower time frame, hourly chart, and take a look at what has transpired here. I'll put the daily dividers on, and I want you to just take a look at what I'm going to show you here. Okay, we had last Thursday's, not this week, the previous week's Thursday on the 10th of October. We had the Thursday run here, and Friday we have here. So we open up a new week. Monday trades down. Now, what I'm going to show you, this is something that you should be doing every single day. It's all based on premium and discount. Now, all I have on my fib here is just showing the 50% level, and I annotated it with equilibrium and then showing the price. And the way you get that is this. Okay, these are the settings on the fib to show what I'm showing you here. All I did was remove the Fibonacci levels, 79%, 62, and the 70.5 level. So they're not there because it's not important. Equilibrium, and if you use the percent sign and the dollar sign immediately after that, it'll give you the price that actually is the midpoint of your fib range. All right, so that's what that is. I know you're probably going to want to ask me. So this run up, we're bullish. So what do we look for? Okay, previous day's range. Ideal low risk entry is going to be at or below equilibrium for a long, correct? Yes. Here's equilibrium. Price trades down below it. What exists? What exists below equilibrium? Fair value gap. See that? Fair value gap. So you could be a buyer. This is what you're supposed to be doing every single day when you go back and look at your charts when you go home from work. You're done doing your parental responsibilities and you got time to look at the charts. Whatever your life is, you got to have time to be doing what I'm showing you here. Equilibrium, below it, you have a fair value gap. You can be a buyer. Look at the bodies. Yes, you get these errant price runs lower. That's normal, okay? Every one of these wicks are going to be different across all live accounts. They're not going to have the same low. Some of them went lower. Some probably didn't go as low as this here. Okay, but look at the bulk of the volume. It's in the bodies. Okay, you're buying in here. In fact, you're buying here plus a spread, 5 pips. Okay, why 5 pips? That seems rich. Yeah, you want to make sure you get in and you're not over leveraging your account. You're allowing some of this inerrant price action to come down. It's fine. It's not going to hurt you. Okay, you want to trade with that expectation. Price moves higher. And then we have another day in here. Monday is, look at the profile. Okay, I almost skipped over this. Look at the profile on Monday. Okay, is this a directional trading day? No, but it's a day of accumulation. Why? Because it's in consolidation. It's consolidation day, and what takes place in consolidation day? Accumulation of longs or accumulation of shorts. What's the bias on October 14th for cable? We were bullish. We were expecting higher prices. Well, this is what we get. We have an optimal trade entry. We have a standard bullish order block as well. You can be buyer on this one. But learning from a discount to premium model for very low risk points of entry within a directional bias, you want to look at days that create imbalances, and don't use the days of consolidation like this, like it's choppy and sideways. That's the days you want to enter on. You want to use the measurements of the expansion days, like these big runs here. That creates the imbalance. The public wants to buy it up here. We wait. We want to see some measure of retracement. Measure the range, find out what equilibrium is, and if you're bullish, it's got to be at or below it. Then look inside that range. Fair value gaps. Look for a bullish order block. Look for a swing low where stops would be resting in the form of sell side liquidity. Boom, that's it. There you go. I just gave you 3 different models that quick. Well, I don't understand. It doesn't give me anything. It doesn't give me a trading model. It doesn't give me a trading plan. Yes, it does. Yes, it absolutely does. If you study those specific characteristics I just outlined, I just gave you the bias. I give you the bias every week. Every week I tell you the bias. We're going higher, we're going lower. I tell you the levels it's reaching for. Okay? In between those, you're supposed to be doing what I'm showing you here. Oh, this isn't right, Michael. You should be telling us everything. I am telling you everything. But you're not going to learn if I always point it out to you. Period. You need to be doing this. So we had a consolidation day on Monday. It accumulates longs at. Then we have a day of what? Expansion. You see that? This is the same thing here, just smaller in scope than this day. Watch what we do. Take the fib over to the low of the day, to the high of the day. Right there. Okay? Watch what happens now. Low to high. Here's your premium. Here's your discount. Equilibrium is in the middle. Expand rather, that out in time, extend it so it goes into the next day. Equilibrium and lower. What's here? Fair value gap. Wow. So what you're saying is I could be a buyer in here like I was a buyer over here and get in sync with what? Institutional order flow. Yeah. At or below the equilibrium. What else exists? The order block. Right here. Body, extend it out in time. Bam. Wick to body, optimal. Buy. I don't like order blocks. I only like fair value gaps now. Okay. Inside the fair value gap, consequent encroachment is equilibrium. Add 5 pips to the spread. As a spread, you're buying it in here. You weather all of this. Your stop is below here. Price runs. Handled. The next day is another continuation of this day. Here's expansion. After it runs down, retraces. We have the portion of that day being consolidation. And then it expands up. And then we go into another level of what? Consolidation. Retraces back into previous day's range. Let's get it. High. Low. Equilibrium. At or below it, what exists? Well, there's no fair value gap, but what else exists? bullish order block. Which one? Which one? These 2 down closed candles right here is a propulsion candle. You learn about that in the core content. You can elect to use these 2 down closed candles here consecutively, which makes a bullish order block. It's larger. Extend that out in time, you still would get that plus spread as an entry. This one here has a slightly higher body than this one, but it goes down into the previous order block and then expands. Whenever we see that, we don't want to see the midpoint of that or mean threshold given up. We don't see it here. There's your propulsion candle or bullish order block entry there at or below equilibrium. Wow, pretty neat, isn't it? All this stuff's in core content. I'm not form-fitting anything. You learn all of this studying the stuff that I teach you for 12 months. It's the fact that you aren't taking the time to do your charts like this. Again, I do this every single day, but I'm not going to do this every single day for you. That's what learning is about. You do that work. I tell you how to do it, then you do it. By doing it, everything will start jumping off at the page and your charts will become alive. When you watch me take that small account and run it up rather quickly, I was doing a lot of what I'm showing you here, but I was doing it on smaller time frames too. I was using the sessions, whereas I'm doing the daily range here. You can use the London Open or the London Session or Kill Zone. Take the range of that, and the same thing. New York many times will trade back to a equilibrium or above for shorts in New York for continuation lower. Vice versa. If London is bullish and the overall price bias is bullish on a long-term daily, you get the range of the London session or kill zone and split it like I'm showing you here on the daily range. And many times New York will retrace down to equilibrium just below it and then rally again as a continuation in the New York session. Now couple that with what I gave you as the gold model. You can find that in the archives in the weekly commentaries. Just look for the topics. You'll see the gold model. Okay, what I taught you there, couple that with what I just gave you for the kill zones, and you're going to find candy every day. It gets better than that, but like I said, this lesson today, this lesson is so rich with things that you're going to come back to and say, he taught it back then. On this particular day, October 19th, 2019, I gave you something that you've already learned in core content, but it's only because I'm showing you examples of it, okay, and doing the work on this past week that you should be doing yourself. But what I just gave you is your homework. I don't want you sending me pictures of it on Twitter because you're sharing content then, and you're breaking the rules, and we can't have that. If you do what I'm showing you here, okay, it will absolutely transform your perception on price. It will absolutely give you that missing link that you feel like you aren't able to grasp yet. But when you get this and you see how these things form, you're going to get a buzz off of that. You're going to feel like, wow. But then what will happen is you'll start getting new questions. New concerns will arise. What about this and what about that? Don't get nervous. Write those questions down in your study journal because they're going to be the opportunities for your next level of understanding and learning. That's how it happens. That's development. That's normal. You have increased runs in understanding, like this price action here. Down here you started as a trader, in the mentorship. You got excited initially. Then you feel like, I don't know if I can do this. And then you learn something new, okay? And then you get in here and you start messing with it and you feel like you're not learning all of a sudden. And all of a sudden something happens. I give you a lesson that gives more insight. And then boom, your understanding goes higher. Then all of a sudden you start to do it and you try to do it and then it doesn't work. And then all of a sudden you feel like you've reduced in your understanding. Then you expand with a new lesson or a new tweak on something that I've already taught you in core content, but because you haven't applied it, then your understanding goes through the roof again. And then you start studying it new concept, and then it goes down, and you feel like, oh, it doesn't work, or I'm doubting myself. And then I tell you something else in the next video, or I point you to something else that's already been taught in core content, and then you study that, and then boom, you go through another level of learning. It's the same thing, folks. It's the same thing. Your understanding is just like an equity curve. It's not going to be like the backslash, okay? It's not going to go from 0 to infinite, okay, overnight. It's going to be an ebb and flow. But you have to submit to this process. Otherwise, you're not going to accept what's required, and you'll quit. Or you'll rush to do something you're not prepared to do, which is trade with live funds. We don't do that here. I'm teaching you delivery of price. If you don't understand this, I promise you, you will lose your money. You will blow your account, and I don't care who taught you. You're going to blow it. If you don't learn what I'm teaching you and tearing down really to its barest essentials, you have zero chance of making money. You'll have flash in the pan, one-hit wonders, and I had initial 9 months of luck when I first started trading. And then I discovered I didn't know how to trade. The 1990s were brutal to me. You don't need to relive all that. You don't need to do all that just to go through the same things and get the same scars and say, yeah, I did like you did. I don't want none of you to do what I did. I don't want that. I lost a lot of money. I lost a lot of peace of mind, and I'm scarred because of it. But if you do not listen to me, you're being a fool, because you're accepting and inviting all of the loss and the pain that you don't need to go through. Trust me, it hurts, and it's not fun losing money, period. So understand that and say, okay, what do I do and what don't I do? And then live in that. If you do that, you won't need 27 years to get as good as I am. You won't need that. I'm not saying you'll get there in half the time, but you won't need that much time. And that's really where your perspective should be. Okay, your expectations is, I'm going to get good at this over time. I don't know how long it's going to be, but I'm thankful that I don't have to go through the length of time that ICT went through. That's the realistic opportunity that is in front of you. That's the right expectation, because it doesn't have a definitive timeline, and it has a very clear goal. You're going to know more than you ever could, but it's going to happen at the pace I'm putting you through, because the pace I'm putting you through is optimal for everyone, because I know my content. You may think that you're smarter than 15 other people in this group, but I'm telling you, I have extremely smart people in here, and they will tell you that submitting to this process is hard. It's really, really hard. I'm not saying that none of you can't comprehend it, because it's not hard. When you see me outline all these things, it makes it look real easy, because I'm showing you conceptually, because I have the insight behind why this was going to go up. I told you before it moved up. I told you it was going to happen. But now when I take portions of what you learn in the core content and place them in the right places, now it looks like hindsight. If you're new here, well, this is obvious. Anybody can do that. I do this before it happens. I've recorded myself doing it. I've shared the examples in here. I do it, okay? I do it. You need to be doing this, even if it's in hindsight, because that's how I learned it. I did what you just saw me do here. I had journals, pages of it on every commodity. Oats. I didn't even trade oats, but I had it on there too, because I had to more or less consistently train myself that it was there. If it just happened in one market, that's not enough of a sample size for me. It needs to be generic across all markets. And what I taught you is in all markets. It's in every asset class. So relax. Let this process take whatever time it needs. You cannot form fit your deadline to success. You can't do it. You cannot do it. It's going to happen when it happens. And I'm honest in that regard because I'm not going to try to sweet talk you and say, you're going to have it in X months. You're not going to do it in 6 weeks. You're not going to have it in 2 years. It's going to be whenever it happens. But while you're going through that process, you're going to realize that your deadline or your finish line for what you deemed as success, that's going to go further away from where it is right now. That's the part you don't understand. See, you have in your mind, if I can make this many pips, this often, this frequency, and this much money, okay, and if I could do it by this much time or this age, then I have succeeded. That is not realistic. Not because you can't do it, but because it's going to morph over time. It's going to transition to something that you don't think of right now. When I first started trading, my goal was I wanted to make $1,000 per month and save that until I was 40. I don't have those goals anymore. They've been changed. It's all way beyond that now. So whatever you're struggling with and feeling like you have to do right now, I got to do it this way. No, you don't. You got to do it the way I'm telling you to do it, because the way I'm telling you works. And it's going to transform everything about your life. Everything. Not just money, not just you ain't got to go to work anymore, not because you understand what the markets are doing. It will change everything. It gives you a peace of mind knowing that you don't have to stress. You don't have to worry about these things that you're worrying about right now. Any effort or time or energy spent on worrying or obsessively compulsive, just pondering the ideas that you have to know something by a specific time. As soon as you realize you're doing that, you need to stop and outwardly say to yourself, I am making an emergency out of nothing. There's no emergency. There's no urgency that I have to have this by this time. I don't have to have that. When you do that and you give yourself the permission to relax and let it happen, it's faster for you. It doesn't seem like it would work like that, but that's exactly what happens, because all of your attention is diverted from the negative side of what if I don't get it by this time or by this age, if I don't make this much money, to, well, I'm learning this, I've learned this far, and I've gotten this far in my learning, I'm seeing progress here. You're feeding your mind exactly what it needs. Positive reinforcement. Okay, it's self-talk. So if you're constantly feeding yourself with, I need to learn how to day trade, or I need to learn how to do one shot, one kill. I need to make 100 pips a week. I have to do this. I have to do it. And then you don't do that. Your mind retains the fact that you did not do that. And it remembers the pain and the uncertainty that comes from that next engagement where you should be doing something. Your brain's going to say, man, I had a very, very bad time doing that, so I'm not going to do it. You'll have all of these very convenient distractions, and you won't be able to focus. And it's because your subconscious is saying, don't do that, because it's uncomfortable. I walked by that blue house with the white picket fence, and it had a pit bull in there. And every time I walked by there, I got bit. So naturally, anytime you see a blue house with a white picket fence, your brain's going to say, I wonder if they got that dog like I had experienced before. And you'll probably want to cross the road. And the thing that you're trying to do to avoid something that may not even be there, you walk out in the road worrying about the dog, and you get hit by a car. You don't see those things coming because you're worried about things that you don't need to be worrying about. Okay? So just know that there's a lot of this in your brain that you're making more difficult than it needs to be, because you're focusing on the wrong things, the negative things. I've already outlined where your risks are. I've already outlined where your problem areas are going to be. Stay in the areas I've pointed you in. If you do that, you have nothing to worry about. It's all up from here. But if you want to look to the side and worry about what everybody else is doing, why aren't you able to do that? If you're minding their business, you're not minding yours. And I'm not minding your business, and they're not minding your business. You have to do it. It's your life. You got to make the best of it. And the tools that you're learning here will help you carve out a life that is unimaginable. But you have to do the things I'm telling you to do. And don't do the things I tell you not to do. It's not a cult. I'm not a cult leader. I'm not a guru. I'm just your friendly neighborhood mentor. I've been through this myself. I've seen it work with other people, and it's consistent. It takes faith. It takes initiative. It takes drive and trust. And ultimately, if you don't trust me, you won't do it. Because that's really what it boils down to. You either trust me or you don't. And I can't make you trust me any more than I've already done. Ball's in your court. All right, so that's the business for cable. Obviously, I've outlined what I think it's going to do and where it's going to reach for. CAD, we have some pretty impactful things for Canadian dollar Monday, Tuesday, and Wednesday. I've already covered that in the calendar portion at the beginning of this video. I like these equal lows down here. I think that that's going to be a draw on liquidity. What changes that if we trade above Thursday's high? Okay, so if we trade above Thursday's high, then we'll have to start worrying about the imbalance here and then the equal highs. But right now, I feel like because of the Canadian dollar futures contract, if you look at the December contract for Canadian futures, it looks like it has a bullish market structure. So that would be inverse for dollar CAD because the pair is dollar versus Canadian. So if this is going down, that is basically the same thing as Canadian dollar going up. And just know that that's the underlying background what I'm thinking of when I see this. But the obvious liquidity resting below here, I think that's the next draw on liquidity. Now, it could do something entirely beyond that. It could blow that out. It could trade down here and then start to move higher, okay? Or not even make an attempt to go down here. It could open up this week and just start running for the buy side liquidity here, or it could be completely wrong, okay? But that's okay. The transaction I'm willing to look for is I want to see these lows taken. And if I get into an engagement and it takes a loss, then I take a loss. It's okay. But I'm framing it on the basis that we have continued weakness on the dollar. That's what I'm looking for. I'm looking for the dollar to try to make an attempt to get down here. This area here is a balanced price range. So in this range between here and here, we're expecting similar price action in here, where it's a lot of give and take, and then eventually maybe make a run here. I would love to see it have a low resistance liquidity run right below here and then go into the imbalance here and volume imbalance. I'd love to see that and attack these equal lows here. I'd love to see that. But in reality, just because I want to see it doesn't mean it's going to unfold like that. We're in a range. We don't know if it's going to be a straight run. I'm expecting high resistance liquidity runs between here and here, but still targeting here. That translates to CAD reaching for here and then maybe down into here. Okay, and I'll talk more about that on Wednesday or by way of a forum if we get something between now and Wednesday midweek review by way of a chart or something like that on the forum. And I think that's going to be it, folks. Gold, it's holding right now. I think that I would love to see this gap stay open now because it had an opportunity to go down and close. It didn't. If we go down now, I think if we close this, it's not good. We'll want to go below here. Why? Because we spent too much time up here, and to come down just to fill this in, it's not required. It's not necessary. It would just be, I think, a speed bump and then reach below here. The low to high equilibrium is here, so to get below that in equilibrium would take us below the sell side liquidity in here, and there's really nothing in here to frame it other than this order block, which is too high up on the spectrum between low to high for that dealing range. So again, I'd like to see this remain open and start to rally with the weakness in the dollar. That's normal, but if we drop down and trade this fair value gap and close it, that'll probably be the I guess the initial stages of a deeper retracement below here and then this imbalance. I like that one being filled. It would be very clear. Let me just show you. I'm sorry, this is a really long video, but I just want to shoot from the hip this weekend and just tell you some of the things that are available to you using what I teach you. So you can see here's equilibrium. At equilibrium, we don't have anything to really speak of, okay, because we already used the order block in here. So at or below equilibrium, well, that takes us down here for a sell-side liquidity pool, which is beautifully aligned with a BISI fair value gap. Okay, so buy side imbalance, sell side inefficiency. So what am I saying? I'm saying that if gold feels like it needs to go lower, focus there. Because if we close this in, I'm not confident that we're going to close this and then go higher. I don't think that's what's going to happen. I think that they'll want to come back here and upset the longs. If they knock these out, nobody will want to go back in long. And that's usually when I like to go in long. And we would look for these relative equal highs. If it were intact still, that would be our objective from here to here. But I don't want to see that close. I want to see it stay just like it is, okay, and then press higher from here. If it doesn't, if it goes down here, then just focus here. All right. That's all I got for gold. I'm not real excited about gold. Unless it were to trade down here, then I would be more interested in gold. But right now, I just don't want to touch it. Too many other things going on with my pet pairs with euro and cable. Obviously, my attention is on Canadian dollar this week, Monday through Wednesday. And I guess the same thing can be said for euro relative to its daily chart. Looking for this level up here. And again, a lot of give and take back in here is expected. It doesn't have to, but that's the nature of a high resistance liquidity run. We expect some time in here, not just these straight runs. Okay? And that, my friends, will be it. I will talk with you by way of Twitter, I'm sure, Monday. Enjoy your weekend. Be safe, and good luck at trading.